Welcome to Investors Insight, where today's topic is Fed surprise ? A lot going on this week, but the market moving event will be the Federal Reserve meeting on Wednesday. Trey is going to talk about the details of the Fed meeting and the inflation report this week, because for the first time in 15 months, the Fed is expected to skip, not pause, but skip raising interest rates. And even though inflation remains higher than what the Fed wants, and after a big beat on the recent jobs number, a surprise hike on Wednesday is unexpected and would possibly spook the markets. We've already seen surprise hikes from Australia and Canada last week. And one thing I want to point out is that our central bank isn't the only one meeting this week. The European Central Bank is expected to raise rates on Thursday, as is Norway and Sweden. We're also watching a number of African nations whose central banks have been tightening. The U.S. and Bank of Japan is the only central banks expected not to raise rates this week. And we're watching global central banks carefully, as we've already seen signs of economic slowdowns across the globe. Last week, we got confirmation that Germany has slipped into a recession, as Europe's largest economy has dropped in output since last year. And central bank actions have consequences. So that's why we're talking about it in this vlog, and something we're focused on today. So Trey, talk about our Fed decision this week and also the inflation report that we get before the meeting.
Yeah, absolutely. It's definitely a tale of two global economies. We've seen the U.S. inflation remain somewhat elevated but falling. We expect the inflation report that comes out on Tuesday to show a year-over-year increase in prices of 4.2%. That's down from last month's of 4.9%. And why is that important? That's important. While 4% is still high relative to recent history, it's well below recent history, and it's also well below the current federal funds rate. The current Fed funds rate is 5.25%. So if we get an inflation print of 4.2, that puts over a percentage gap between where inflation is and where the Fed funds rate. And that Fed funds rate is the money that the Fed is lending overnight to banks and what you are seeing in the money markets. That means investors are able to outpace inflation with cash. So that's a very important distinction between our current Fed funds rate and the global interest rates. But we're also seeing definitely weakness. Like you said, Germany's in a recession. China reported that their global exports were down over 6%. China is the exporter to the world. So when their exports are down, that's likely an indication of slower economic growth. So something the Fed's going to be looking at very closely is the U.S. versus globe. And that pause, to what you said, not necessarily a pivot in policy of are they going to cut rates or are they going to stay flat, but more of just a pause and a skip is what a lot of the market participants are expecting, because the next Fed meeting isn't months out. It's just out in July, the end of July. Next Fed fund meeting is July 26th. So they get to pause and they really get some, but they don't have to sit there for very long. They get to adjust and see where things are. So a lot coming out. Another important indicator is what the Fed is going to say about their quantitative tightening. So during COVID, the Fed expanded their balance sheets to the tune of nearly $9 trillion. That provided needed liquidity for the market and the economy. Since the beginning of 2022, they had been reducing that liquidity. We're expecting that they're going to continue that to the tune of $80 billion a month. However, year to date, that liquidity drain has been offset by the Treasury Department pumping liquidity into the market. Now that we've seen the debt ceiling raised and the Fed potentially pausing, that liquidity drain may restart again. And so very important to hear what they say. Last time in 2012, when we had a major debt ceiling debate, the Fed came in and actually provided easing. So a lot to talk about. Even though the market is pretty much priced in 100% of a pause, there's still a lot for them to digest. So big news, big week. Looking forward to what the Fed's going to do.
Yeah, Trey, the Fed actions matter. We saw it last year. We're seeing it this year. And that's why we continue to talk about it pretty much in every vlog. So we'll see what happens on Wednesday. We do not expect a Fed surprise, but something we're ready for and continue to keep you updated. Thanks for watching.